How did 2011 turn out for the seniors housing sector? Well, simply said, it was quite impressive relative to other real estate sectors. And by year-end, occupancy figures were approaching 89% with slight improvements in profit margins throughout the country. Yes, 2011 was the year of the healthcare REIT. These REITs made their presence known with more than $22 billion in closed real estate transactions. And in fact, the three largest healthcare REITs are now listed on the S&P index. In total, these three REITs own more than 125,000 units or beds. So while the REITs have helped propel seniors housing's presence, their activities are a mere reflection of this sector's emergence. Seniors housing is no longer viewed as the new kids on the block by many. Transaction velocity overall has gained traction with cap rates and valuations for quality assets and portfolios approaching the 2006-2007 levels. And according to Real Capital Analytics and the National Center for Senior Living and Care Industries, transaction volume in the third quarter of 2011 was $9.1 billion. So looking forward into 2012, we are poised for yet another improving year. Let's take a look at the considerations. Demographics remain on our side. Since 1987, when the Census Bureau started tracking the real median income of households 75 and older, we have seen a 22% increase in income as compared to 3.3% for all households in the United States. For this new year, we are seeing new sources of debt and equity patiently emerging in this space. We cannot rely on agency financing or the REITs to fuel the growth of this industry. The future of the GSEs is highly speculative, especially in this complex political and economic environment that we are faced with. So who's going to fill the gap that will potentially be left by the GSEs? Well, what we're finding here in recent months, and certainly going into 2012, we're going to be seeing life companies, banks, on a selective basis, the banks, private equity firms, pension funds, and certainly offshore investors who are seeking reasonable returns and safe havens for their funds. So what should one look for when considering investments in this space? Well, let's take a look at value-add factors. For example, the conversion of independent living units to assisted living units. That's a huge value add, a tremendous revenue bump, and a way to retain residents longer term. The integration of ancillary services also to boost revenues and, in addition, to reduce turnover in these communities. Do you want to own or do you want to lease with a REIT or an investor? In the case of the REIT, you can either consider a longer term net lease, triple net lease, or a RIDEA structure using the REIT as your effectively joint venture partner. You want to look at the culture of the current operating entity, and if that culture fits with your needs and certainly the needs of residents over time. Finally, you want to recognize the intrinsic value of institutional grade assets and portfolios for acquisitions, or clear winners for turnarounds. In both cases, what we have found in the industry over many years, and certainly now, there really is no margin for error any longer in this business.